Hello and welcome to Banking the Future, a series of discussions that delve into the ongoing evolution of financial services in Nigeria in partnership with Union Bank as the lender commemorates a century of banking business in Nigeria. I'm Esther Awuni. Welcome. Now, Nigeria's banking and the broader financial services industry is experiencing significant changes. The statistics show that the usage of mobile banking channels is rising in the country. On today's program, we examine how tapping into this trend can help banks transform their processes to improve customer experience and, of course, stay competitive. My panelists for today's discussion are Chukwuka Monye, partner at Ciuci Consulting, Anthony Oputa, partner and financial services leader of industry, PricewaterhouseCoopers Nigeria, and Nath, executive director, service and technology at Union Bank. Gentlemen, thank you so much. A pleasure to have you on the show today.
Thank you.
So we're looking at how banks, of course, are adapting or should be adapting their processes to deliver superior customer service. Now, I believe that before banks can, adapt these processes and know what they have to, first of all, know what the customer, the average customer wants. So let's start from there, getting into the mind of the average bank customer. Chukwuka, let me start with you. You're a consultant. You went out there to do some research, looking at customer preferences, perception, why certain customers choose bank A over bank B, and why certain customers are leaving bank A for bank B, and so on. So just briefly, just tell us what your findings were, highlights of your report.
Okay. Thank you again, Esther. I think just because we're here talking about transforming processes and customer experience, I'll probably share, two quick insights as it relates to mobile banking and technology in general. One of the very, very interesting insights was around, how do people actually make cash deposits? We looked at in the last couple of years. Interestingly, we didn't notice a lot of changes, say 3 to 4 years ago. But in the last 2 years, we noticed that there's been a decline in the use of bank branches as to make cash deposits. Now, what does that mean? Does it mean that people are using ATMs more for cash deposits? Does it mean that people are using more online mobile banking solutions to do transfers and things like that? Exactly. The data that I'll cite here is that in 2015, when we did the study, it was about 93% in terms of the channel preference for bank branches. The following year, in 2016, it was 80%. Now, why this is interesting is that, 4 years ago, we said that, this thing might be a lot of hype. This whole idea that customers are ready to be very tech savvy, they want to begin to adopt all these things, but it's changing now. So at the time, one of the things we kept telling everybody was that, especially the banks, you need to prepare because these customers will change. They're already showing signs that these are their preferences. The fact that they're not available does not mean that they don't like them. But at least they are indicating that they prefer some of these things. And so even just that decline alone showed that, from 93 to 80, where is this money going? If they are not depositing the cash in the bank branches, where is this going? Another interesting piece of information is the use of mobile phones. That's what you started with. It's increasing. In fact, when I do, things like focus groups with the youth, with the younger segment, they say that if social banking was really social banking, that they would actually use it, but that a lot of banks say they are doing it, but they're not really doing it. But they wish, So it still shows that there are a lot of opportunities, that the banking in the future, the potential is just enormous. But I think the summary of it is that the banks are now more aware of, these preferences and are working towards it. It's just that it may not be at the pace at which the customers are demanding it. Okay,
well, of course, Nat will talk to us about that. But let me go to Anthony. You probably will corroborate what Chukwuka said. But I know that at PwC you also look at the industry. You're looking at trends, and of course, on the customer side too. Tell us, what can you tell us?
Okay, so At PwC, there was a study we did in 2014. We called it it's about retail banking, where we see the retail banking segment to be in the year 2020. So that was the 6 years from 2014. And it's amazing that some of the trends we had pointed out in 2014 are things that are already playing out. Okay. Now I'm speaking from a global perspective, but some of the things I'm talking about will also reflect here in Nigeria. Right. If you track back 2014, and that corroborates your statement about the use of branches. 2014, if you didn't have an extensive branch network, it was not conceivable that you would be a successful bank in Nigeria. Today, you're hearing banks saying, oh, I'm a digital bank. We do not need branches. And the reality is that the demographic changes we're seeing, and that's one of the trends that we noted in that report in 2014. Some of the demographic changes you're noticing over the last couple of years, there's a term that we use, people who are called digital natives, people who grew up knowing nothing else but that smartphone. And you find that people in that segment, they want to be able to do their banking transaction anytime, anywhere. So you're going to find that, and that is going to increase as exponential as the technology that drives those sort of banking anywhere, anytime, begins to get better and grow. Some of the greatest changes, if I bring it to Nigeria and I localize it, some of the greatest drive you see that has caused the explosion in use of what I would call alternative channels to branches is the availability of, simply put, data, better telecommunications network. Correct. The GSMs they've moved from the 2G, all of them are offering some form of 4G today, which means you're able to use more secure data access, you're able to do transactions faster on that same mobile phone or connected device anywhere you are in Nigeria today. And that is a major change that the banks are latching on to. Okay.
Now, but let me just ask this before I come to you now, because I think it's easy for us to take for granted that everybody has gotten onto this tech platform, mobile phones, the whole mobile platforms. I know that Nigeria has a large youth population, and I saw it in your report. You separated the millennials, youth, and those under a certain age demographic. But there's still a lot of people in this country who haven't jumped on that bandwagon. Even sometimes I struggle with my phone. My nieces have better luck. So I'm thinking, are we living now? What about those people, those category of people? Are they on board?
Right. So there, as it stands, I'll put the banking public in 3 categories. Okay. You have those whom I would call the digital natives, who are born and bred in that environment of using this. There are people like me, old but not too old, who I would call digital converts. We are forced to do it, and then there are those who still remain. But the thing about demographic shift is, remember the report we talked about was a 6-year, 2014 to 2020, and I said this trend is going to continue. It's only a question of time. While you continue to cater for the people who refuse to change, if I may use that word, in today, we are talking about the future, the trends that you're going to see. Change will happen. It is whether we'll move with the change.
Well, it is happening, and as it is, we obviously have to move with it. Nath, let me bring you into this conversation. Obviously, and also stressing the fact that, using market intelligence, doing research on what the customer needs are and how you can adapt that to your processes. I want to believe that Union Bank has already, you have to have started it. I know that you have. But tell us how it's changed for you in terms of your processes. When did it all start for you in terms of when you began to notice that change, the less reliance on the brick and mortar? You see more young people, they want to be on social media, they're lodging complaints, but not, they're not coming to the branch, they're going online, they're calling your customer service lines, and it's all digital. So just help us understand that.
Okay, thank you very much. I think for a while, one of the things that we've noticed over the last couple of years have been a gradual shift from the traditional way of banking to things you can consider today as a digital form. But what are the major things that are driving this, which you may be asking, will be key things around technology. Technology has played a huge role in terms of making things that hitherto been very difficult or cumbersome, very easy to use. Regulation has helped a lot because a lot of times we now have situations where through legislation and through regulation, we are able to do a couple of things. There are many things we couldn't have done much earlier than now. Now, with the advent of things like BVN, there are many things you can actually do easily. There are many things that prior to now you were not able to, you would not have allowed, which regulation is beginning to allow. The ease at which you could do a lot of things. For instance, you go today, you can use your ATM card in any bank's ATM, at least up to the time you use the first four times, it's free for you. So customers are beginning to see those things as ease of doing things. And the mobile banking step has come a very long way. But for us, if I step back to check and say, what has it done for us? The quality of information we now have about our customers have actually grown. We know a lot about our customers, so we are in a position to have products and services that are tailored around the segments. Before now, what banks generally do is to create something and then tell the customers to use it. Yep. And then you advertise and tell people how to use it. Now, we work with the focus group, we work with the customers, the youth, the different age group, to find out what works for them.
Correct.
So, sorry, the body does it mean that there weren't market intelligence reports, the likes of, that PwC, Ciuci Consulting produced? Didn't we have data on customer preferences before? And I know regulation played a huge part. The BVN and all of that, New York customer and all of that, but I'm just wondering.
Yeah, I think there are a combination of a lot of things. First level, we didn't have as much information as, before the BVN, you have people that had 4 or 5 accounts in different banks under different names. Mm-hmm. Okay, so which person's information were you gathering? Okay, somebody is 50 years somewhere, in another bank is 25 years old. So whose information were you using or something? So, but now you can actually start streamlining a lot of things. And now with the advent of social media, you now see the kind of things people do on social media. So you can actually tailor a behavior. You can actually get services that suit a particular behavior. So you don't get a situation where you get like somebody like my mom and you send a product that doesn't make sense. Because you have a lot of market intelligence you can actually use. And what has done is, and I think it's very important that we do not think that the brick and mortar will go off overnight. It's not going to happen. It's not going to happen.
The older generation will probably have that fear.
Yes, no, it's not going to happen, because the reality is that we still have situations, even when you call certain areas and you say, press 1 for this, press 2 for that, press this for operator. People go on pressing that one where you need to talk to somebody. They want to talk to somebody. People want to see a face. They want to talk to. So there's still a lot of human interaction that we have situations where we can say, no, you can apply for a loan. You don't need to come to the bank. Press here, press that. Your loan will be given. But there's someone to know who gave me the loan. If I have who do I talk to? So that element is not going to go off overnight. But what has actually happened now is that increasingly, between a lot of banks that I'm aware of, is between 60 to 70% of their total transactions are now done outside of the banking halls. Correct. So which is a good sign. It's a very good sign. Okay. And to also shock you more, we're beginning to see that people that come to banking halls to make withdrawals of cash of below 40,000, the number is dropping. In fact, you're beginning to see less than 40% of the customers coming to the banking halls to make withdrawals of less than 40,000. Yeah. That gives you a sense that a lot of people, the adoption is actually going very high.
Oh, so that's good news. Chukwuka, let me come to you. Okay, you want to add? Okay.
I wanted to add to the market intelligence comment. So one of the observations with the banks is that, so the PwCs and the CUCs, they will provide a lot of, what's perception and what's going on outside.
I think we should also put out that point that it's just perception, what we think.
It's not like what we think, yeah. But the other interesting part is that years ago when, some of the banks did not have the right systems and infrastructure to capture data, good quality data, they were unable to really, one, capture data in a good way, and 2, be able to mine it in a way that they're able to even make sense of it. So there are 2 things. So they had tons of data, but was it structured in a way that it was useful? So
when you say useful, to trickle
to
down to
even
the bottom, the bottom line.
to the bottom line. Yes, because
Okay.
and that's what's important. So if you're able to combine what the customers are perceiving and the actual data from the behavior internally, what are you seeing them do today? Then you're able to make good sense of the information and make certain proposals. But that was not the case before. That's the case now, or it's becoming the case now, because people are now aware that even before we go externally, let's even know what our customers want today.
In the truth, you asked the question of how the PwCs and the CUCs of the world, how they contribute towards your product development and all. Now, what you would find that in the past, banks, and I've had the privilege of having worked in a bank, worked in 2 banks before coming to consulting. So I've sat in product development meetings, okay? What you would see is that you would try to discern what you think would work for the market, okay? That's what people would buy, and then try to make a very good product and then get the customers to buy. That's what tended to be. Now, but these days, and again, with all the various, including social media, let us not take social media away. And people are very vocal about what they want and when they want it. Now, there are lots of, he mentioned data mining. Data analytics is becoming a very key thing that banks or financial institutions are keen in. Because once you're able to gather that data, so you now have to change the approach. Instead of building this glass and getting them to buy, in a short space of time from getting the information to product development, you can actually then build products that they want, because you have data from structured sources and unstructured sources such as social media, and then you build customer-centric products that you can then offer. If I can give an example, something as simple as a mortgage loan. By gathering data about people, your target customers and what they want, you can then determine what are the things that typically make someone default on a mortgage loan. And then you price that into or mitigate it in your service offering. And voila, you have a product that they can deal with.
I find myself asking, why didn't we think about this in the first 10, 15 years ago? But now, because of all this that's happening, we've found competition to be very fierce, because almost, if not all the banks are now these platforms. So, I mean, everybody's trying to offer products that are tailor-made for their customers across different demographics. So I'm thinking that has made the space very competitive. So
but 10, 15 years ago, the technology to do this wasn't there.
Wasn't even there. Well, now it's here and everybody's using it to the best of their ability, as it were. But then, at the same time, there are still differences in terms of who's using it better, who's getting more value from the kind of usage that they're having. Let me go back to Chukwuka. Where issues around customer preferences, why you have bank A and B using the same platforms as it were, but there's still a preference. Customer A still prefers what this bank. So I'm wondering, what is that separation?
So that separation, I'm thankful that there's separation now.
Okay.
Yeah. Years ago, it was very, very difficult to actually differentiate what bank A is doing from what bank B is doing. But because things are evolving, because the customers are becoming even more savvy, because technology too is evolving, so many things are happening. Banks are now thinking that if we don't innovate, we'll get in trouble. We need to think outside the box. We talked earlier about mobile penetration, etc. How did we, arrive at this concept, this whole technology, USSD? Why didn't we say, what, it needs to be smart all the way. Smartphones, and you must have this kind of smart device across the country. It's not practical, it's not realistic. So, of course, some of the banks sat down and said, how do we reach all these other people in the internet? Oh, by the way, I now use USSD codes. And that was, for me, one example of this innovation. You need to begin to, with this data that you're gathering, do something about it. Do something about your customer segments. If it is clear to you that there's a segment that is saying, I want XYZ,
target it.
Then target it. Yep. In the past, the case was, Bank A is doing well. They have this product and it's moving. Let's move.
Yeah, but that was my perception, because I thought that was what was happening across the board. No. I mean, and even with you see with the telcos too, they have this kind of, one certain promotion comes up. A few days later, it's the same thing, and you're wondering what.
There will always be copy or
Some of those
if
products,
it's successful, why don't replicate it? They'll always be there. But the key, going back to what Mr. Monye says, the key always remains with the guy who is able to innovate. And I'll give you an example about banking today. Banking has gotten to the stage where it is no longer about putting my money, withdraw it.
Right.
And there are lots of people who are concerned about lifestyle banking, for instance. Okay, so you talk about why the preference for one bank over the other bank. Now, you will go into customer segmentation, which you will probably know better than me. But drawing from my own personal experience and looking at the things that I worry about, I want to be able to deal with. Between Bank A and Bank B, the bank that provides me ease of settling school fees, for instance, provides me ease of buying tickets or particular airlines, that's lifestyle banking.
Okay.
So those are the things you find that some banks are now using to differentiate themselves from the others. And they use terms like social banking to drive all that.
Because the discerning banker. Nath, let me bring you in. Let's talk about the Union Bank experience. I know, like Chukwuka said, innovation is key, and you have no choice but to be innovative. And the way you're being innovative also counts. So just share with us the Union Bank experience, how you're catering to different needs, how you experiences around how you make products from scratch, to not waiting for the customer, but
No, thank you very much. What we've been doing a lot have been around focus groups, which means working with the customers, understanding their needs. Being actually, customers, they are always very excited when you are in their shoes, because they see you as a partner. But customers are no longer looking for bankers. They are looking for friends. Yeah. It has changed. So usually, that's my banker, that's my this. They're looking for friends. They're not looking for people that are just going to make them. They're looking for somebody that understands their business, adding value into what they do, and being part of what they do. I'll give you an instance. Recently, we introduced retail loans for SME type of customers, the people that own. Because traditional banks will go for where's the collateral, no collateral. We do not ask for any collateral. We just check what have been your pattern over the last 6 months. Because people don't just change. Adults don't change quickly. They have a pattern of doing things. They're stuck in their ways, So if somebody is used to it, you pay school fees this time, this is your lifestyle, this is what. So this is how your income has been. So what's the essence of... A lot
of people need to know about this.
Yeah, exactly. So,
I was just going to say that. I would be surprised if you have a whole bunch of people waiting before you open to. But how this information, is it already available to you from the last 6 months? Okay.
No, so what we're now doing is we have a banking relationship with us. We are pushing this forward. We are going across to businesses, shops owners and business owners and letting them know. And based on your kind of lifestyle, your kind of stream of income, we can actually determine the kind of loans that you can pay over a particular time frame. Same thing goes for salary earners and all those kind of. So there's no point looking for someone to say, okay, you want to give somebody ₦1 million, you want to get the person's house. If he had money for house, he wouldn't be asking you for 1 million or 300,000. So there are certain things that banks generally will do when it's like you don't want to give somebody something and you give conditions that the guy will never meet. So these are things you learn over a period of time. And we also notice that some of the things we've been advertising, where situations like somebody's gone out and he doesn't have his or her ATM card, or you need to give somebody some cash and you say, where are you? The guy says, I'm in XYZ place. Is there any bank, any ATM around you there? The guy says, yes, okay. You use your cardless, using your mobile, and you send money to the guy. He goes to any ATM, presses the cardless function, if that bank ATM has it, and you're able to pull cash out of it. You're able to go to somebody's area and you open an account. You don't need to say, okay, let me drag you to the banking hall. So because the BVN is there, you can actually indicate what the person, there's some basic referrals. So what we're trying to do is, because banking is moving away from the traditional structure that uses technology. It's now more or less a technology that is offering financial services.
Well, true, if you think about it.
Yeah, so that's actually where the world is moving
I'm thinking, isn't that, I mean, all of this, because it sounds like a lot of pressure, because you constantly have to be on your toes, not just, I mean, all the banks. So I'm thinking, and are you stretched? And I know all of this is also coming at a cost. Help us understand how that is.
Thanks. The key thing, the reality is either you innovate or you die.
Yes.
So if it's a binary, it's not, there's no option.
It's not optional.
It's not option. It's either you innovate or you die. The reality is that the customers are expecting a lot,
Yes.
and you've got to, your job shouldn't be just to meet. Your job is to exceed. Because literally everybody will eventually meet expectations. The reality is that the difference is actually, so the best you can be when you're meeting is to just be number 2. So customers are not looking for those that are just trying to meet up. They're looking for those that are running a little bit ahead of them. It's not cheap. There's a lot of investment in research, technology, research and development, a lot of things. So, and that actually boils down to what are the roles of other fairly lowly regulated institutions like the fintechs are playing.
Okay.
So which is a big challenge for the banking industry, and that's why while you're moving there, okay, in that area you want to be able to surpass expectations. The another challenge we do have is actually these things don't come cheap. And because they don't come cheap, you can't even transfer this cost to customers because you also have regulations around what to charge there, what to charge there. This system must be up all the time, but you cannot charge. This can't happen, but you cannot take this. But the fintechs, fortunately for them, now you're competing with an unregulated entity for products and services that the same crowd of customers are actually going for. So the best thing that's one, creativity in terms of your cost management, creativity in terms of your cost transformation, creativity in terms of how well you can do more with less. That's actually the kind of things that every bank is now dealing with.
Okay, you wanted to, that's a good point you brought up there. I
Very
mean,
fantastic.
fintech.
And I really love his statement about a bank using technology is no longer the model, but a technology offering financial institutions. And then they mentioned fintechs. And what comes to mind is a statement I heard from someone 2 days ago. He said people have learned that they don't need banks to manage their money, but banks need customers.
Okay. We had like 10 seconds to ruminate on that. Chukwuka, I was going to talk about, I mean, it all looks, on the surface, looks a bit easy, but I know that it's not seamless. I mean, there are challenges. And when we're talking technology and all these transactions happening online, there are threats, there are risks. I mean, cybersecurity, that is one. But I also want to talk about, let's just dwell a little on the customer, then we'll go deep into the other issues. How impatient today's bank customer is in terms of if they don't get that service in whatever time, they switch.
Mm-hmm. Okay, so a lot of what Nath talked about was pointing to the fact that things are changing rapidly, and therefore the banks also, you said innovate or die, that was the language. Now, here's something we need to remember, that the average bank customer today has access to information just incredible, like never before, right? They know that, in XYZ countries, banking is also done this way. They know somewhere in the world, there's this type of technology. They know that on Facebook, certain things can happen today. On Twitter, this is what's going on. So their expectations are a lot higher because of this exposure to just the available data that's out there.
Because they know that also they can name and shame on social media.
They can name and shame on social media.
Definitely you will respond.
I mean, 5-10 years ago, when a customer complains, is it possible for a telco or a bank to ignore that customer?
Yes.
Not today. If somebody says, I got a bad experience, and they tweet it, or it's on social media, the bank is responding.
That's a lot of pressure, but it's good because I think it helps you to deliver that superior customer service.
It puts a lot of pressure, and just to answer your question, all that, all that exposure to information is what is increasing their own appetite and expectations. Yeah. It's just incredibly high these days. it puts pressure on the banks, but I think that, I told a banker that if you begin to think the way they think, it will help. Yes. It will go a long way to sort of helping you create the right systems and processes to cater to them. The issue is, if you insist that I'm a banker, this is the way we have been, this is what I have to do, then you'll get in trouble because they're thinking very differently. So if you can put yourself in their own shoes, that's where all the intelligence comes in. You need to understand their mindset. You need to understand how they're behaving, But things are definitely changing.
But that's actually a very valid point you raised there, because for us, and at least in the banking industry, we have the kind of phrase that we use these days where we tell you that the speed at which you move is actually dependent on what is pursuing you.
Okay.
I like that.
So if you're being pursued by a snail, it depends. That determines your speed. But if you look behind and you're being pursued by a tiger, probably you
better run fast.
run fast. So those things actually do add up in terms of, so it creates the right level of pressure. But what is actually happening really is that because the ownership is actually even at the executive and board level, ownership of this month is actually World Customer Service Month. Mm-hmm. That's on October. And literally every CEO, every board chairman of banks or companies that I know had a way of sending one form or shape of a message to their customers just to tell them you appreciate them. Yep. So in that process, you're also trying to give them an opportunity to say, let me know where else I can be of value. So you are actually opening up yourself to say, I am available to be of service to you. So it means that on every day, using your people, using technology, process changes, using data, whatever is available to you, you've got to continuously to improve on yourself. And you need to do that in a very efficient manner. Because at the end of the day, you've got to have returns to the shareholders. They're not doing a charity job.
Is that the Union Bank experience right now?
Yes.
You've looked at how much, in terms of cost, how much you spend on this in the market intelligence, knowing your customers being at least one step or two ahead of your customers in terms of what they need and how their needs are evolving. And of course, at the same time, taking a second look on the other side to your bottom line and the value that's coming, like you said, to shareholders at the end of the day. Yes. Are you achieving that balance? Has it been a good trade-off, as it were?
It's looking good, because at least we look at our cost-income ratio consistently. We look at how much we're investing and the value we are bringing. We are predominantly a retail bank, and we are very proud of that. Retail is a number game. You want to be able to do so many things for many people at least cost as possible. But the key thing about this is, while everything is important, you also need to strategically look at what are the most important things for your customers. And then you invest a lot of your time and energies on those areas where the customers have told you that these are our priorities. You will not likely be everything for everybody.
Not possible.
It's not.
But is it easy to carve a niche and say, okay, this is what I want to be for or to our customers? What we
do is we want to be what our customers want us to be.
Okay, that's a good.
You have to identify who those customers are, because you can't be everything to everyone.
Because we've actually segmented our customers at different areas, and each of these areas, people are different. I mean, I'll give instances like, if you go and put ATMs in Ikoyi and some areas in VI, if you're lucky, you get 2,000-3,000 transactions in a month.
Yes.
If you make a mistake of taking that ATM to Aja,
okay, so it's a highbrow area versus densely
before you finish dropping it, there's a queue behind you or something. That 2,000-3,000, you get it in a day or two. So you also bet, if I take a POS machine and go and drop probably somewhere that probably is not that savvy in terms of POS or something, that are still predominantly using cash, it will not do so well. You understand? Same thing happens on the mobile space, and but the good news is that the adoption rate it's so phenomenal that we've got to continue to improve on those areas and channels that the customers. That's why whether it's a brick and mortar, it must be spacious, must be airy, it must be inviting. Whether it is alternate channels, it's got to be something that is simple, friendly, that you do not need to. You don't need to be a banker to have a bank account. So we need to start thinking like customers, not like bankers. So, and that means you've got to use something and bring things that they can easily relate to. And that's actually the areas we spend a lot of energies and R&Ds on.
Okay, we have about 1 minute before we take a break. Anthony, you wanted to add something to that?
I was just going to support, yes, we want to provide, or as an institution, you want to provide everything that the customer wants. But the reality is that you can't provide all. And then at the bottom line, you're still a business. So whatever channels you want to use to serve your customers, whatever product offerings you want to go, you still go through the basic of a cost and benefit analysis so that you don't bleed at the bottom line for your shareholders.
Absolutely. So, gentlemen, we need to take a break. Chukwuka, hold that thought. We'll come and hear it when we come back from the break. We'll take a short break right now and continue our discussion, looking, of course, at how banks are adapting their processes to the ever-changing needs of today's Nigerian bank customer. Join us again. Welcome back to this special panel discussion on how banks are transforming their processes to improve customer experience and stay competitive in a changing environment. Still with me are Chukwuka Monye, partner at Ciuci Consulting, and Anthony Oputa, partner and financial services leader of industry at PricewaterhouseCoopers Nigeria, and Nath, executive director, service and technology at Union Bank. Gentlemen, thank you so much for your time so far. It's been an interesting conversation so far. We've talked a lot about technology. We've talked about how, of course, banks now have to, of course, be a step or two ahead of what their customers need. Now, of course, as we talk technology, there are threats and risks. We mentioned that, but I want us to go deep into that. Maybe, I don't know, Chukwuka, if you could start off with that in terms of pitfalls, potential pitfalls. And I know it can't all be easy.
Okay, so there's a major risk that I'll sort of tie to what Nath said before we went on the break. He made a statement about efficiency. So yes, things are going at a rapid pace. So banks need to innovate rapidly. But in that whole process, in that cause of rapid change, you also have to be efficient. I'll just use a very practical example. Your birthday is in July, but you receive a birthday greeting in February.
You know, that has happened to me.
It's happened to me. Okay. Now, how do you think the customer will feel?
Yeah.
Now, in technology, they say garbage in, garbage out. Yep. So it's not so much how rapid you're adapting and adopting technology. So you may be spending a lot of money, but how well are you executing? So that point you made about efficiency is what I'm connecting to a major risk, because you may go and buy the Rolls Royce of technologies, but if it's not meeting the needs, in fact, it may even be creating a worse off experience,
especially if you don't know
for
how
the customer if you don't know how to use it. I mean, if somebody's, you get it in February and then July comes, you don't get any greeting. And there are people, and there are customers that react.
He's making a good point, because I remember how I'm a bank customer, and I remember how I felt. It was a simple text, and I knew it was an error, but I suddenly found myself, my emotions connected to that text, and I said, why would they send me? It's not my birthday. So when my birthday comes, am I going to still get this text? So I was like conversing like it was a human being. So yes, I mean, good point.
So that point about, technology and ensuring that there's efficiency is so crucial. Otherwise, that whole essence will be defeated. Absolutely. That whole essence.
But I want to the issue of security threats. When we had that major cyber threats this year, it was massive, and it was very scary. And I remember talking to some bankers and analysts about how protected we are customer concerns. I mean, just a few weeks ago, Yahoo talked about up to 3 billion of the customers' data being stolen, emails. And so I'm like, oh wow, I mean, that is a real and present threat.
Cyber threats clearly is a major risk these days. And you know, the truth of the matter is that given the service offerings that the banks are doing now, and the fact that all this information they're pulling, whether you talked about BVN, there are certain data that are linked to that BVN which the banks have available. It's there in the cloud, if I may use that word. And all it takes is a hack or a leakage, and all my information is out there. Okay. So there are people who sit down, and it's really, really a scary prospect. And if I go back to what Chukwuka mentioned, you know, there's always that speed from conceptualization to deployment to the customers. And then at the back of your mind, and I go back to what is chasing you that he mentioned, you know that the innovation life cycle is so short, and the copycats are really at your
They're
heels.
working too.
So what you find is that you, rather than go through what we call the normal the production life cycle, from concept to this, and all the tests that you have to carry out to ensure that it meets all the various needs that you want to achieve, as well as security. You find that in that speed, things get skipped over. The unfortunate thing is that that client or that customer that is clamoring for that product will be very unforgiving if his data gets breached.
Yeah, I mean, it's a huge responsibility.
Yeah. So that's a lot of things so you find that banks have to struggle with this, especially if you're a bank that you're building your future on innovation. It's a real threat and a risk that you have to manage.
Well, thankfully, of course, Nath is head of Executive Director Service and Technology at Union Bank, so you're the perfect man to be here right now. What has been the Union Bank experience? How are you protecting the customers?
I think the cybersecurity is real. What everyone, at least everybody that is in this space, should be doing, and exactly that's what we're doing, is to ensure you invest in technology and security. You can never overinvest in security. The reality is you could get everything right. It's just like one plane crash, to be honest. Honestly, whenever you hear that airline, what reminds me, nobody remembers how many times it landed safely. Yeah. It's just that one wrong incident, one wrong flight, and it becomes like a defining factor for you. So while it's very important for all of us, which is exactly what we do, is you need to fail cheap and fast. You must develop systems and processes that allows you to be agile. Yes. You need to be able to fail fast and cheap, learn from your mistakes, and bounce back again. So when you have a setback, our principle is do not take a step back, stage a comeback. Because that's actually how you overcome. So you need to continue to think, be ahead, where possible, ahead of what the fraudsters are doing, but learn from what is, and do a lot of collaboration. That's why we had a lot of things with the people from outside the industry, because they're always looking at things we are so much inward focused. So, but they look at things from a lot of things from. So we deal a lot with consultants and things to also let us know what is happening out there. As you hear what is happening out there, you actually react or respond immediately, because those things are very important. Recently, we tried to get an insurance around cyber security. So we went globally looking for insurance companies that can insure against, because we looked at all the other things we've done a lot of things right. We're saying, okay, if one of all the things we've done, one of them misses and so can we still insure? Nobody wants to come and insure. Even the people that are insuring, they're giving you a cap that's almost equal to the amount you're paying as insurance. So you understand? So that tells you that it's actually a real risk or something. And the good news about it is when there is a defined or real risk, it is an opportunity, because it means that people will now have something to continually to work on, because that creates a real opportunity for people. Because for us, every risk is an opportunity. And the question you'll be asking, what is the opportunity here? What will differentiate a bank A from a bank B in the future, because we're talking about the future, is actually In addition, when everybody is getting to a level of top customer satisfaction and reliability in terms of stability and in terms of financial stability and all of things, questions now will be, can I trust you? Can I trust your process? Can I trust your systems? And security is a major defining factor, even in the trust game.
Okay, Chukwuka, did that come through in your report? Trust.
It's a
for the customer. It's a digital trust.
It's a huge factor, and what we are finding is that when you start to look at demographics, the levels of trust actually differs. Yeah, and it sort of makes sense in a way, because what's the millennial will say, for instance, is, and this, we even did a focus group on this and said, you know what if you were to set up a bank? What would the bank look like? We did the same focus group for an older segment. What would the bank look like? Now, you will see that most of them were describing banks, for the older guys, that seemed very close to what we have today. For the young guys, nobody said branches. They said, they may have one head office on the island just so it looks cool, but we really, but we really don't need it. Yeah. So their own world is so different, and that's why, everything we've said today about technology and segmentation is so important, so important, because once you miss it, you'll be creating someone says you can create the right product for the wrong people and mix it, the wrong people ultimately. So those things are so crucial.
With all that's been said here today, I'm feeling so eager to see the topic banking in the future. What banking would actually look like in the future? You did PwC, you did that. You've taken a very long look. So I'm thinking 10, 15 years, maybe 20 years down the line, because it's all happened so fast. So I'm thinking, what will be the key highlights, the defining highlights for Nigeria's banking industry?
In 2015, we did actually a video on Africa banking. So it's a 5-minute video, and it talks about the banks that will be in existence, not specific banks, by the year 2050. And it looked at 5 mega trends that are not just shaping global events, but are also affecting how things happen in Nigeria and in Africa. And there's one particular trend. We've mentioned technology, so I'm not going to bother about it. But moving from now to 2050, one major trend that was identified is the fact that Africa is estimated that by 2050 will be 2 billion people. Okay? And that 2 billion people by 2050, 50% of them will live in cities. They'll be urban, they'll be not Harvard educated, but well educated. And the things that we're talking about 2050, these people grew up in an environment of technology enabled. People who, before I get into a restaurant, the restaurant already knows what I want to eat. So I come in, I come in, I eat, I move. And those are the kind of things you find that the banks of that future 2050 will be grappling with. So it's the banks that understand that future state today and determine who its fiercest competitor will be in that 2050 that will still be in existence.
Oh, interesting. Nath, Union Bank has done a century of banking, and I know you're looking at another 100. I'm personally afraid of what's going to happen in that 100 with the way technology is going these days, but we're not projecting too far, because most of us won't be, at least none of us will probably be here then. But I'm thinking, in terms of when you look into the future of banking, what do you see?
We see a lot of optimism, we see a lot of hope, probably because of the track record. After, when you've been alive for 100 years, there are, even if you were in one place, there are lots of experience that comes along with it. So there's a lot.
You've been around, as you say.
Is a lot. I'm sure there are not many human beings as old as we are today. But what actually is important is, after having done 100 years, what is the next 100 looking like? And as Chukwuka had mentioned, the next 100 years, you will see a lot of things that if somebody is mentioning to you today, will look like it's absurd, it's not possible. Some of the things we foresee coming is, even in the next 20 years, there won't be need for using of ATM cards.
Yeah.
We see the next 20 years, there may not be need for ATM card. What do you need it for? You need to swipe. When you're having a lot of things now you could do within using short codes and, if you want cash or some withdrawals, we do.
Visa.
It's actually gone, clearly. So we also seen situations where there's going to be a lot of convergence. Today, everybody had their own short code, everybody. So if a customer has 2, 3, 4 accounts, you need to do *826 and then you remember another star, this, another. Sometimes you need to start writing down. There's going to be a convergence where you will likely have one thing and then you decide where you want to move things. We're also likely to see a greater use of direct debits. Today, if I'm owing you, you need to wait for me to pay you. If I have an agreement with you, and you say you're going to pay on so day, I can actually initiate a withdrawal from your account without having an account with you.
Okay.
So there are,
to
the extent I have an enforceable contract.
Oh, wow.
Just like same we have insurance or something. So rather than today waiting for me to write check. So we also say today, we also looking at in the next 20 years, the use of check will be probably about 5% of what is currently being used today, the use of checklist. So if somebody is in that business, it's a good thing, but obviously you need to start thinking what the kind of things you'll be looking at in the days and years to come.
Okay, so if I could just quickly button,
personal experience, I haven't written a check in 2 years.
Okay, interesting. Something just came to my mind. Financial inclusion. Anthony, you talked about more people living in the urban areas, but of course that informal part of the economy will still be there. I'm thinking, what happens to those people? We know that our financial inclusion drive, it's gaining traction, but there's still a lot to be done.
But the huge advantage, for instance, what we do, we're doing a lot of that. I'm aware that 1 or 2 other banks are also in that space in terms of financial. Initially it used to be areas like LAPOs and all those things that have been going around, but now banks are going in there. And there's a lot of confidence from the customers when they hear it is a bank, because at least it has an address, it has ownership, it's regulated. So if there's a problem, even if you want to carry a placard, there's a place to go that somebody will listen. If you want to picket or something, there's somebody to scream or insult or something. There's a place to go. So, but that area, in terms of, is likely going to be the next big thing. And why do I say so? It's informal, but it is the most structured, respected setups we have today, at least in the country. That's where a decision by either association members or check groups or something like that is binding.
Yes.
Today, today, if you give a facility or something to one person, let's say in oil and gas, the next person in oil and gas cannot even convince him to pay. If you give somebody in telco, the other one can't even have a session. If I do that to yam sellers, you rarely will see, unless the person is dead, you rarely will see a member of that place not paying. Yeah. Maybe yam seller or pepper sellers or tomato hawkers or something like that. So you see, or even Okada people or something. There's accountability is communal.
Self-regulatory.
It's self-regulatory because there's integrity at stake, and they know an error or misbehavior of one affects everyone. So everybody behaves. So
we all agree on this?
Yes.
Okay.
I can give a real example. Yeah. It's a microfinance institution that I was involved in. And their strategy was to go to the markets, and they do not give to yes, it's microfinance, but they're not going to give to the individuals. They go to market associations. So the money is available through the market association to the members, and it's the market association that enforces collection. And up until 3 years ago, before I stopped being involved with them, they hadn't witnessed defaults.
Chukwuka, wanted to...
Yeah, no, I was just an example. There was a bank that said, they wanted to give loan to one of their customers. Now, they said, and the customer said, yes, but we also want you to extend that facility to our customers, our branches, our franchisees, and things like that. What was very interesting was that the bank said, well, if we understand the way your franchisees work, if we understand the sort of accountability around that whole system, if we also understand the system you have deployed as the HQ and the owner of the business to your franchisees, then we'll be able to make a decision. And just simply because from the head office, they can actually monitor all the transactions across all the branches of this. It was very, very easy for them to make a decision.
Now, we have just about 2 minutes left. On a lighter note, I know that one other space that's very competitive right now is the advertisement space. We hear it on the radio every day on our way to work, and right now it's Uncle Thomas from Union Bank. So many scenarios he finds himself in, but somehow he always finds a way out. Could you just quickly help us understand Uncle Thomas's dilemma?
No, thank you very much. A lot of my friends I actually had a friend of mine that every appointment he comes late. So this particular day, he said we'll meet so place, and then I had already calculated his usual 1 hour late. He said, no, this time around, I'm no longer Uncle Thomas. So he said he has cleared his doubt. But Uncle Thomas is a mindset. Is actually is a mindset that tells you that something cannot be done, that tells you that it's impossible, that tells you that, are you sure? So it's always that second guess, whatever, can it be done? Who has done it before? Is there any track record? Those kind of things. So what actually we're trying to get to a level where people need to tell themselves that it is possible. So what do you want to happen to you? What are your expectations? It can be done. So, yeah, my grandmother did something, it didn't happen. This is not your grandmother. It can be done. So a lot of times people carry a lot of baggage and they are wondering why they are not moving fast. So Uncle Thomas in my mindset is actually for you to liberate yourself. And that's why I say clear your doubt. Open your eyes, see clearly, and so you can actually move forward with the
Well, it's definitely caught my attention. Well, I'm afraid okay, I think we have about 30 seconds. We can't take your favorite Uncle Thomas experience. I have my own favorite, but we just leave it there. But thank you so much. I mean, I'm excited about the banking future, especially the retail banking future. And of course, I mean, we'll all be around hopefully to see the major factors or scenarios that are going to unfold. But thank you so much, gentlemen. It's been an absolute pleasure having you on today's show. It's been an absolute pleasure. And on that note, we've come to the end of our discussion on how banks can transform their processes to improve customer experience and also stay competitive. Many thanks to my guests today, Chukwuka Monye, partner at Ciuci Consulting, Anthony Oputa, partner and financial services leader of industry, PwC Nigeria, and of course, Nath, the executive director, service and technology at Union Bank. I'm Esther Wuni. Thank you so much for being a part of it. Bye for now.